I'm going to explain here just this quick progression up. Okay, is you closed back within that zone. So first of all, you've got, what does that mean? You need to now target the level that brought you there, right? Because that's the
Right.
next level
Okay.
up, right? So now you know that price is going to be coming up here. So what you can do is you can see the trend confirm what you're looking for here as price goes. So we've just broken a new high. What we do is we test it, okay? We bounce off of it, so we know we're going to go to a new high off of this one, right? Now the same thing happens. We make a new high. Right? What we do is we come back down and test it. We've closed above it once again, so you'd maybe be able to add a trade here and then target a new high. So how I have a very high, very, very high win rate, okay, is I generally basically kind of enter blind off of levels. So I determine my bias, I'll draw some levels, and I kind of enter in on the zone. So let's say this 2-hour candle closed, right? What I like to do, you can do two different things here. Is I'm going to draw a zone, basically, right? And that's kind of the zone that I want to be entering short on. And then as it goes into there, right, which would be maybe this wick or whatever it is, right? I would add to it and add to it.
All right, folks, here we are on Trading Up. We've got Chris Hunter back in the house just on an awesome podcast. But before you go and check that out, he's about to go through his dumb money concepts strategy. So if you loved smart money concepts or if you hate it, you're going to want to find out what this dumb money concepts is all about. So, Chris, welcome back to the show, mate.
Yeah, right on. Let's get into it. I'm excited. Okay, guys, smart money concepts. There's way too many rules. There's, this sort of FEG garbage stuff. Like you got terms that, sweeps don't exist, FEGs don't exist. All those things are, just to kind of say this, is they're just levels, and they're just a different way to determine what levels are going to be touched, right? And when there's a stop hunt, right? Stop hunt, for example, all it's doing is targeting a level to the higher time frame, right? So maybe you have, you might call that a stop hunt, but we don't have to dive into cherry picking specific things. You might call this a stop hunt, right? But the reality is, all that is if I jumped to a higher level, I'm going to draw just a line there just so we can see, right? It's I literally just picked this randomly. It's just targeting levels on higher time frames, right? You can find the levels. Sometimes they're pass-through levels. You can see a pass-through level here, right? Things do pass through occasionally, and all this stuff is I made a little free course on YouTube if I do miss something, but that's the pre kind of notion of what I wanted to explain. The reality is, all you need to know is how price progresses off of these levels. Okay. So the obvious thing that everyone already knows is, okay, when we break a new high, we come back down and retest that zone before continuing to the next high, right? And then we break that one, we retest it, and then continue to a new high. That's that staircasing trend that everyone already knows. But what happens when, let's just hide this so it's a little bit cleaner. What happens when the trend is changing? Well, you can have something called failures to make a new high. So there's two options, right? I'm just trying to find something here that's easy to look at, right?
Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now, for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
So when you see, okay, so this is the current price action, right? So we have levels on either side, right? And if you were here, you would say, hey, okay, so we just gained that level, right? So now we're going to retest it. And when we retest it, you can either reject off of it or break back into it. So when we break into it like we just did here, what we're going to do is, this is going to look kind of simple because it's very short, but you're going to test the next level down. This is the next level down, okay? And when we test that next level down, we then see the reaction off of it. So you can see that wick, right? And normally if you were trading SMC or something, you might have your trade here with a stop loss behind, and you could very easily get wicked out. This might be your trade, right? Very easily get wicked out. But the reality is we buy off of that level as well. And then as you see that reaction, you know that we've just failed to make a new low here. So what do? We make a new high, right? And after we make a new high, okay, then we test that level again and we see what happens, right? We broke back into it. So what happens when we break back into it? Okay. Well, you have to go to the next level down, which is what they did, this is the next level down. Okay. The untested level right here, right? And they are going to probably test that level there, right? But every single trade is basically that same sort of thing over and over again, right? You can see that after we regain this zone, we then test the next level down, right? Which is this move here. They broke it, right? And then they also broke multiple levels. So the most recent levels we can draw here is they failed to make a new low here. So probably going to reverse, right? And now that we're regaining, I know this is good. This is just a little bit of a mess is how I'm explaining it right now. But we regain this zone, right? So what do? Is we target the top of that move again. Okay. So what you would do is you'd very easily be able to take a trade off of that. You'd add to it down here and you would not have a stop loss below because you could very easily get wicked out. But you could add to it as we come up and you would be targeting the move that brought you to that low after you've regained that area.
Yeah, okay, right. So I'm just trying to get my head around it. So the the area you're regaining is the one you've just broken, basically.
Yeah,
and you're looking all the way to the left. You're not just looking at the fact that it's closed above the candle below it.
I think I might be jumbling around and jumping to too many things too quickly. So for anyone who's new here, I did make like that course. So it's kind of step by step so people can understand it better. There's a couple, it's just getting kind of complicated the way I'm explaining it. But as you gain this level now, what you do is you see, okay, the reaction off of here, right? So this is the level that we're trying to react off of now. And as long as we don't close back in that level, we're going to make a new high.
Okay, so are you looking to, so where your entry would be, like say when it breaks that, comes back, retests it, are you waiting for it to close and then get in versus trying to predict?
Always close.
Okay, right. So
the only thing that matters is what the candle looked like on the close, right? Okay. So I'm gonna explain here just this quick progression up. Okay, is you closed back within that zone. So first of all, you've got, what does that mean? You need to now target the level that brought you there, right? Because that's the next level up. Right? So now you know that price is going to be coming up here. So what you can do is you can see the trend confirm what you're looking for here as price goes. So we've just broken a new high. What we do is we test it, okay? We bounce off of it, so we know we're going to go to a new high off of this one, right? Now the same thing happens. We make a new high. Right? What we do is we come back down and test it. We've closed above it once again, so you'd maybe be able to add a trade here and then target a new high. Right? Again, what happens is...
Okay.
Do you see? I'm going to show you something really, really small here. It's really small. You failed to make a new high right here. So what happens is this little wick right here was a test of that low.
Yeah. Yeah.
But it failed, right? So then we go for a new high. So you get these confirmations. And again, up here, after you gain this level, let me draw here. After you gain this level, you retest it, right? And then you go for a new high, which is over here.
It's kind of simple, isn't it? Because it's these levels happen all the time, and when's a good example of when it fails to really do what what you'd expect it to do.
It's incredibly rare. And I'll show you something here really as we're finishing off. You see how do you know this massive dump was coming, right? Well, you re-entered that zone and all of these levels have already been tested.
Yeah.
So you knew that they were at least going to come down here, right? I'm not going to break it down even further because that seems like a wild drop for me. But you knew that everything there was already tested, so all those levels are weak, right? So when does it not work? Well, when you read the chart wrong, basically, it always works. And how it always works is you need to use the higher time frames. Okay, so the higher time frames will always take precedent. Where you can see that if I draw on the 4 hour here, let me see, because I believe this was today. I was just looking at the chart today. I'm going to just draw right somewhere off of this wick, I think. So we can see where that level is, okay? And I'm going to jump up to the 4 hour just so I can kind of remember here. Okay, wait. And I just want to see like how it reacts off of those levels. Okay, here you go, right? So that's a 4 hour level, right? So you want to be watching. This might this might be where you could get confused is, okay, you've now made a new high. So you should be bouncing off that level, right? But you are on a 4 hour level. So there's going to be you know what I mean? There's going to be the trend change on the 4 hour. And you can get confirmation that, you know, there's still the trend changing here and you still have that buy up and that failure to lose. So you failed to lose that level. So what do? You come back up and you retested the exact 4 hour level again.
And what level, what timeframes? Because obviously there's dozens of timeframes. What timeframes do you just sort of go, well, if I just monitor those ones, it makes it not too confusing?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
I know what you mean. If I'm day trading, I use a pretty simple strategy, and I could break down how I would open the day if you want to. I use the 4, the 2, and the 1 to determine what direction I want it to go, and then from there I watch the 15 for these failures and bounces. Right, so this would be kind of a bounce and a gain, right? And the 15 would be where I'd be watching to take my trades, and then I would determine my bias every new hour. Okay. So how it works is the 4 hour is the strongest. So whenever a 4 hour candle closes, so in whatever it is, an hour here, the 4 hour candle is going to close again, right? That new candle close is going to be the most significant. So what I'm seeing right now is, hey, it looks like we're failing on the 4 hour to make new highs. Okay. So that means that what's going to do is it's going to come back down to probably this level. Okay, so now I have a bias. Look, now I've gotten confirmation with the 2 hour as well, failing on that last level. So you can see I should be in a short right now, no? Right? And the 1 hour, I don't like the 1 hour a whole lot compared, but it does help a little bit. But I use mostly the 2 and the 4. And then you can see, okay, I've closed back within this range on the 1 hour. You're retesting this level right here and then rejecting off of it. Then we watch the 15, right? And we'd be looking for some sort of trade on the 15 potentially, right? And you maybe wait for that close or whatever you want, right? Some sort of failure that tells you it's going down, and then you take the trade because this is your target. This is your target now.
And so how do you take the trade? Do you typically wait for the close, or would you get in on the wick? Retest? Okay,
so how I have a very high, very, very high win rate, okay, is I generally basically kind of enter blind off of levels. So I determine my bias, I'll draw some levels, and I kind of enter in on the zone. So let's say this 2-hour candle closed, right? What I like to do, you can do two different things here. Is I'm going to draw a zone, basically, right? And that's kind of the zone that I want to be entering short on. And then as it goes into there, right, which would be maybe this wick or whatever it is, right? I would add to it and add to it. And if the candles on, maybe the 15 or the 1 hour started closing above, it really kind of depends, and you need to figure it out on your own over time and watch things develop and watch the trend develop, and you really need to have an understanding of how this works. I will close it if things are closing up here and the trend is shifted. Okay, so if it's going against what the progression is telling me, that's when I close it.
Yeah, it's the same as I had a guest on a couple of weeks ago, Michael Katz, who was doing similar thing in terms of it was getting to a zone, he was entering, and it either closed on the other side and he's like, I'm out, it didn't work, or he gets a high win rate, which he did. I think he had like 90%. So
mine's right around 80, 90, right, when I'm doing it this way. The alternative of what you could do is you could wait for a failure. Like if this wicked up and it failed to gain, I would just enter immediately and short it all the way down, because that's a really strong sign. Or you could wait for some confirmation, or you could enter blindly on higher time frame zone, on higher time frame levels. Right. Like this level here, if we were short biased, right, which would, that candle body was closed short, right, we could be short biased for the day. As it comes up to us on the 15, hey, look at that. I'm going to short blindly, and then I'm also going to add to it because I've just gotten confirmation that we failed to enter that zone, right? So that we can short it down, right?
Yeah, it's I'm really impressed with this actually. How on earth did you come up with it?
There's a trader Sumo, kind of taught me a couple things. I think he does sell some sort of stuff too. But he taught me for free. I think we just kind of bonded well. And then he is teaching, like, he's a bit different, but it's very, very similar. And then I've been working on this for a couple years because I'm trying to make something that is just
super easy to do.
Like there's no rules. You know what I mean? It's just follow. Like there's nothing you do other than a level. How does a price react to a level? It's the most bare bones you could ever trade, right?
Yeah, I mean, if people are waiting around for like a week to take a trade, I think this is probably going to get them in 3 times a day, right? Hey folks, just jumping in here quickly. Now, if you're looking to trade dynamically, you want to learn from my own trading mentor, JJ, then what you need to do is click the link in the description, register your interest, because we're going to be launching this Dynamic Traders Club very soon and you don't want to miss out. All right, let's dive back in.
Yeah, I could probably take 2, 3, 4 trades a day. Every hour I'll relook. So let me show you something here really quick. So this is how I would probably start the day, right? Let's say we're trading today. I'm going to completely clean it. And this, I'll give you the breakdown of what would happen. So sessions, right? So New York Open, I only trade the New York Open. I would look, okay, the 4 hour closes at 7, let's say, right? So 7 a.m., I see this candle close. And okay, now I have a short bias, right? Because we've just closed beyond that, okay? We'll look at the 2. Okay, same sort of thing, right? Short bias. There is a failure here, so potentially it could be shifting, right? But generally a short bias, right? We then look for that 4 hour level that I was talking about earlier, right? And we want to short off of that. So we take the short, okay? But then what happens is we get new candle closes, okay? So now we've regained these zones, right? We've closed back within those zones, and we've really bought back up. So that's what I'm going to watch, basically. This might not be the best example, but when you're seeing these closes back within, okay, maybe I don't want to be short anymore because this is retesting when we're going down and we're regaining. So now I see, okay, every hour, now maybe this one's closed and I retest that level. So this is the new level. So now I want to be long because I'm in this regain of this zone, right? We've regained, sorry, let me draw here. We've regained this zone. So now I know that we're going to target these tops because that's the next level up. So then I know I need to be looking for longs, right? So I'm going to take probably this long here after maybe I had taken that short and I got out of it because the trend had changed. So now I'm going to buy off of that because that's the level it retests, right? And I'm going to target that zone, right?
And you're literally like looking at the detail there. So it only just closed above that level, but that's good enough for you to go, yep.
There's zero reason to fight with the algos because an algorithm does not know the difference between this and this. You know what I mean? All it cares is it passed that level.
Yeah.
The difference to them is, okay, did it pass this level or did it pass this level? You know what I mean?
Yeah.
And so that's why they retest this one and not this one. Okay.
Right. Yeah.
Because that's the more critical level, the more recent level.
And this is from when you're talking algos, you're talking like mechanical strategies versus the okay, yeah, cool.
Yeah, the market moves based off of algos at this point, and it's just going to get more like that, right? So, you know, we want to position ourselves with things that work with algorithms.
Awesome. Well, look, Chris, fantastic having you on, mate. That's an epic breakdown, and if people aren't walking away going, what the hell, this is awesome, what's the best way to find out more about you?
Yeah, YouTube, Hunter Maven. There is a free course of me breaking this down step by step that's less jumbled around me ranting and whatnot. It breaks it down topic by topic, super simple stuff, all for free. Not going to charge you nothing. I'm just trying to give back at this point. So,
well, look, folks, we also did a podcast interview. If you do want to find out more about Chris, he's been on the show a couple of times, in fact. Go and check it out. There's a link below the video here. We'll hook all those things up. And also hit subscribe, like, and that notifications bell, and we'll see you in the next one.